second floor studios in Dallas, Texas. It's the Small Business Living It podcast with Dean Castelhano.
Well,
hey, what's going on,
Wes,
Dad? How you doing?
Upstairs again, another version
of
the studio. It looks better every time. I don't know.
I tried.
Who's your decorator?
Actually, this one was me. This wasn't a Victoria. This wasn't a Victoria brainchild. This was I had this, just make it more relaxed, kind of go with the talk show vibe.
It's warmer. Feels warmer.
Yeah.
So today we're going to do the second Legends series. We did our Joe Foster.
That one got a
tribute.
lot of good. Yeah,
we got a lot of good
positive
feedback on that.
And I've been wanting this to happen for over a year now.
Yeah,
so I'm excited.
So we got the boss, the chief,
El Jefe,
founder,
El Padrino.
We got Joe Graham up here with us.
Yeah, Joe.
Welcome, Joe.
How you doing?
Contrary to popular belief, I am alive. If I'm a legend, I think does that mean you're alive or not?
Living legend.
Living legend.
Yeah, living
clarification. We're not standing over your grave right now.
No offense to Joe Foster, who croaked about 2 months ago.
Right. Joe is not a living legend anymore.
Right.
Joe Foster.
He's with the Mickey Mantles of
this
that.
Is the Joe Graham living legend.
Yeah,
so this is episode 1 of Living Legend. Thank you for the clarification. And welcome.
I have to speak up. You can't tell the difference.
Right.
That's why we mic'd you.
So, I'll say that Joe asked me for a little bit of an outline, and what I know about him is that this will go where it goes.
Yeah,
so it'll be fun and entertaining.
That's why I always tell people, we take one topic, we jump from there, but after that, just let it ride.
Yeah,
that's the best way to go.
Let me just say that in terms of, I think I've talked many times about who the most important people in my life and business career are, and I've been fortunate enough to have Joe here and Philip Askew and others, but the 2 primary partners I've had in my business career. So I'm going to try and get Philip up here someday because he's the one that coined the phrase living it. So, Joe, welcome. I think you and I have been together now for almost 19 years.
Wow.
2006.
Yes.
I came, we were in Turtle Creek. I guess maybe the first question was, why did you hire me?
I was desperate.
That makes sense.
No, I thought that I can't remember, Dean, when I did not know you. It goes back so far, and I just always was impressed with you. And I thought that in our company, it's a little bit different than a lot of lending operations, because in our environment, you have to turn your own deal down. That's unlike most places, a bank or somewhere, you have somebody else can turn your deal down, and that's somewhat critical to making the company work. And you just had a lot of integrity and BS and all of the critical things you need.
All the proportion. Right. To your point, my pedigree was lending, and then I went to mortgage banking, and we both have similar pedigrees, and we'll get to that in a second. But I loved lending, the lending side of it. But when you say unregulated lending, and you say, as you say, a lot of autonomy, freedom, creativity, that's really what attracted me to it.
Well, I got addicted to it. I didn't start out to have to be that way, but it worked out. I was fortunate.
So that kind of can lead into tell us about the beginning. What is it that, do you want to talk about how you got to Dallas first, or you want to talk about how the beginnings of the company?
Well, in the beginning, I was 9 years old, and I didn't like to, born in Midland, and I didn't like to play with kids because they had stuff dripping out of them. And in Midland, there's a lot of sand and dirt and all that. And sports were way overrated, I thought, because it took a lot of energy and you could get hurt. And so, anyhow, I have a vivid memory, and I know it was 9 years old because we moved when I was 10, of being in the back hallway And I was just fascinated by Series E bonds, the compound interest. At that era, you would buy them for $18.75, and 10 years later, they were worth $25. And why do people work? This is really a deal here. I'd found the magic elixir.
Amen.
And
money working for you.
Yeah, it took me longer than it should have to realize I needed more than 4 of those. But I don't know why. Everybody
Business,
has their thing. That was my thing.
Making money.
Yeah. And I was hungry enough that I wanted to make a living. So and really one of the motivations was I thought that since I didn't have any money when I got out of school, that if the 2 businesses it seemed to me that you could borrow a lot of money to operate on were real estate and oil. And it just happened that I got a job with Jefferson Standard Life, now Lincoln National, and the mortgage loan department. And they were wonderful people. They didn't pay much, but it was a wonderful group.
Well, my similar story is New York life in Manhattan, same pay scale, different year. But learned a lot, right? I mean, good culture. Yeah.
They were wonderful people. And so anyhow, I went through a training program for 17 months in Greensboro, North Carolina. I got sent to Dallas. And then after about 7 years there, I was managing the office. And IDS, which was IDS, the parent company, was the second largest manager of mutual funds in the country. And they wanted to open a nationwide mortgage banking operation. And I got to open the Dallas office. And then the way I started Graham Mortgage and Graham Investments was that they had, in the 70s, they'd made really large speculative land loans in Florida and California. And it was about to sink the REIT that they had and the mortgage company. Mm. And they were concerned because the customer of IDS that put up the debt didn't really know the difference between the parent company credit and the REIT. Mm. They were supposedly told, but evidently really didn't understand that. And so IDS was concerned that if the REIT went down, and the mortgage company, that if people would cash in all their life insurance and mutual funds. So anyway, I got the chore of doing a workout. One day in the late 70s, I was back down to Sherry Kirkendall and myself. Hmm. And
shout out to Sherry.
Yeah, Sherry's still around. She's also a legend. She worked for me, or I worked for her, I'm not sure, for 46 years. And anyhow,
we got a great picture of her downstairs in her beehive. Was that her senior picture?
No, I hired her because that picture actually was, she had 3 really wonderful sisters, and they all went out to the mall, and in that era, you could have beauty shots made.
Oh, yeah, I remember, yeah.
You know, and they would put on these wigs, and I hired her because I thought she was really good looking and had that big blonde hair. I didn't know she'd bought the blonde hair.
I didn't know it was a wig either till you just told me.
Oh, wow.
I've been looking at that.
Yeah. So that was the secret. It wasn't the hairspray, it was the wig.
No,
okay.
Oh, no, yeah. So, obviously there was a lot of discernment and thought went into this operation. And fortunately, IDS said, we've got all out of you we can get. We're going out of business. Mm. And so the last year and a half, they said, you can do whatever you want to do the other half of the time, and then finish up our stuff.
Oh, interesting.
And so otherwise, I probably would not have been brave enough to start my own business.
Mm. So you had a little support there from as you transitioned over to your own business owner. I do want to make one quick clarification, or this goes without saying in Joe's mind, but as he said, he and Sherry worked together for 46 years. They were, in my mind, partners. Sherry was multifaceted. I mean, she was smart. She was tough. She had a great mind for business. She dealt with some very institutional, sophisticated clients and some not so sophisticated clients.
Amen.
Yeah.
What did you define not so sophisticated? It was
Well, just kind of like I can remember one of her last assignments which was so stressful is that we sold a house that had furniture in it, and the person who bought it thought the furniture came with it.
Oh,
and it was a litigious lawyer or a doctor, I don't remember.
The lawyer.
And he got and Sherry was right in the middle of it, and she just kind of took it on and dealt with it. And I know it was very stressful, but
that sass.
She took on all those tough assignments. Is that fair to say?
It's very fair to say. And then also, she was really respected by UT Southwestern Medical. And
love that.
In addition to my mortgage stuff, I don't play golf or have any hobbies. I wouldn't call Southwestern a hobby, but I did have two other businesses in that I was the exclusive outsourced real estate department for UT Southwestern for 29 years, and then still do something similar to that with Scottish Rite Hospital. And she actually negotiated a 170,000-foot lease out there, and hopefully this doesn't get too widespread. I never saw the building. And anyway, she really did a wonderful job.
Yeah. And
she actually,
this leads me to, I knew this would take me to other places, but other than real estate, Joe, you have invested in so many very interesting businesses, and I'm going to let you do your Homevestor line. I won't steal that. But before we get to Homevestor, I do want to talk about what is now the Katy Trail Ice House.
Oh,
can you talk about
that's Trey's favorite spot. Yeah.
Yes. Well, it was me and three Jewish doctors, and they one of them was the lead general partner, and they decided that we could take this old car barn down at the end of Ruth Street on the what was named was the Katy Railroad, and later the trail. Anyway, we were going to rent this building, and then we'd put these picnic tables together from Home Depot, and we hired the so-called Star from Texas Tea House. And Texas Tea House was a place you'd drink a lot of beer and stand on the tables and all that kind of stuff.
Sounds awesome.
Yeah, it really was. And to call him a star, I have been told, is a little bit of a stretch. He actually worked for IBM during the day, and then he did this at night, I think. But anyhow, not to take anything away.
They have that reputation.
And his name was Will Barnes. And
so interesting.
We called the place Will's Barn. And it lasted probably 9 or 10 months before it went broke.
Hey, man, they almost made it a year. There's nothing wrong with that.
Well, we were off to a great start. One of the doctors that was the general partner hired I guess it'd be better if I not name names here.
But, okay.
Oh, there we go.
Yeah.
Okay, so I'm going to switch to another business. So I've heard, so let's talk about Homevestors for a second. I think people kind of know what that is. We buy ugly houses kind of a deal.
Yes.
So what was your tagline?
Well, it was...
it's going to be the name of the episode, so yeah.
I'm not sure if this might be what you're talking about, but...
Something to do with your feet.
We had the only houses that you had to wipe your feet when you came out instead of when you went in. They were really raw. And
so that's wiping your feet on the way out.
Wiping your feet on the way out. I like that. That's pretty solid.
That kind of sums up what kind of deal we're dealing with. And you think you've heard some crazy people. Well, it was pretty amazing. We did about 160 houses, and it was a good business. But the problem was the Wall Street boys wised up at the end, and we would finance Bruce Butler and Les Davis, who were great guys, still around, and we would buy the houses and we would have the loan, and we were partners. Jerry and I also was a partner with them for Tarrant and Dallas County. And we would do those, and then the homeowner would be financed by, at that time, Ford Motor Credit, and they'd make a long-term loan. Bruce and Les had good credits. The homeowners typically were not so great. We were really pre-subprime.
Understand. But you were making those ugly houses prettier.
Oh, one of the things I particularly remember is we drove up in front of this house, and it had the loudest purple. And they couldn't sell the house. Mm-hmm. It was the iridescent purple house. Mm-hmm. And I think they said it took 3 or 4 coats to cover that color.
Oh, my gosh.
Because it was
purple?
Purple. Really better.
Somebody had to think that was a good idea. I just want to talk to that person.
Some of this was just common sense. But
what fascinates me is that when people talk about real estate and finance, and you think about banks and insurance companies and so forth, when you kind of became this entrepreneur, if you will, on the financial side here in Dallas, there was a whole bunch of businesses. You had a towing business, you had a brick.
Yes,
did you have a foundry for a brick business?
Yes, we did.
What else? What else am I?
Well, one thing that was a little more far out was that we had a prototype of a one-man jet helicopter. Now,
helicopter?
I don't know what you call it. It was a one-man jet helicopter.
Okay.
And I'm not a physicist particularly, but if you think about this, if you put a motor on this rotor, the passenger is just as likely to turn as the blade.
Oh,
so
yeah,
it's a little bit of a problem.
Oh, that's interesting. I understand what you're saying.
So this dude out of Midland figured out that if you had a screen on the end of the rotors and you ran hydrogen peroxide through that, it would explode or some such thing. And we actually were on the cover at one time of Popular Science magazine.
Get out!
And we had a Navy contract, and like a lot of small businesses, our guy was more of a dreamer than a doer, and it went broke. But we had a lot of fun with it.
Yeah, I would. I guess this is kind of a lesson for the aspiring entrepreneurs out there. Some wisdom. It's like, don't be afraid to fail, or you're going to fail for sure.
Oh, it's just you never know.
Yeah.
Well, and also we had my great partner, great guy, Jimmy Agsaf, and I were in on these deals, and we figured out that you could use soybeans to make flour, and use that to make bread. And so Jimmy actually got Mrs. Baird's bread to run.
Oh, I remember that Office Central, right? Yeah.
They actually ran a sample of this. So we went over there and put the stuff in, and there was a little bit of a problem with soy stuff in that it would tend to be a little bit pink. And so they put this flour in, and we went to lunch and came back, and the guy looked like a windmill. He said, "Where'd it go?" It had gone out on the truck, and they didn't know where it had gone.
Oh, so it was in some store somewhere?
Yes, somewhere there.
Pink bread?
Pink bread.
Oh, God.
Somebody won the prize.
Yeah. You can wonder how I made a living as we tell these stories.
Well, so that's a really good segue, because what I think is that one of the worst financial calamities in the state of Texas and in the banking industry created one of the best opportunities and led to the longevity of Graham Mortgage and Graham Investments, and that was the S&L prize.
Yes.
Am I saying that right?
That was wonderful.
So
for us.
Well, did you say the S&L?
Savings and loans.
Okay, well, so for a guy like me,
the savings and loan crisis, where the Joe, you can explain what you think happened there.
Well, part of it started out that particularly a really conservative savings loan was Dallas Federal Savings Loan, because they had 5% 30-year loans, and their clients were so good they didn't move a lot. It was a very stable group. And North Dallas type Park City's borrowers. And when the interest rates went, when the prime got to 20.5%, those 30-year 5% loans went down in value about 30-40%.
Yeah.
Well, savings and loans and banks have 7-10% net worth, so they all were underwater. And part of the remedy was that they said if you're running a savings loan, you can be more entrepreneurial. You can go into the joint venture business, and you can start financing home builders and be an owner and do all this stuff. Well, the staff had obviously no ability in that area. and it really created a crisis. And of course, when the thing got taken over, the government took over, I guess, most of the savings loans and for banks in Dallas at one time.
What year was this?
This is the early 80s.
Early 80s.
So what I would say, what it resulted in was reckless lending. So what was happening is, for instance, there was 50 million square feet of office space in the DFW area. It's my understanding that within a 5-year period of time, that doubled to 100 million.
Oh.
So we already had enough, and then we just went, because there was capital to do it, because people kind of, would you call it fudge the underwriting?
I don't know what they did, but I actually had a friend that got a contract, and I went with him. We got a Holiday Inn in Memphis, Tennessee, under contract for $1.5 million, and he said, "Well, we're going to get $1.9 million loan." I thought about that for a while.
Right.
Well, seems to me somebody's going to get a short stick in this deal. So I actually called the lender, and I always remember this guy had actually gone home, and the dog was barking. And anyway, I said, "You're going to loan $1.9 million on this?" And he said, "Yes, but I have an appraisal for $2.4 million. Not a problem." Well, said, "Now you know that we're only paying $1.5 million." And he said, "Oh, but I've got this appraisal." So
wow.
This is not something, they never made loans on motels in the savings loan business at that time. So I thought, the more I thought about that, I've never been to jail and I don't want to go again.
Right. Yeah.
That's a Yogi Berra type of saying right there.
Those are
That's
to your point, federally insured institutions.
So this is,
and government regulated.
So when you said the early 80s, it reminds me, that's the mortgage-backed securities. Is that what you're referring to?
No, that's coming later.
Yeah,
okay.
That's 2008. What this is the famous one was the condo crash.
Well, they were along the same lines as my story about the Memphis hotel.
Right.
They were such believers in the appraisals, and the appraisers were making a lot of money. Appraisers don't get paid necessarily to have a value estimate, to get paid to get the answer that the client wants.
Right.
If you don't do what the client wants 2 or 3 times, you may not get used again.
Right.
Now, again, I hope this is limited coverage here, because that's not the general story, and it's different now than it was then. But anyway, we built so many condos and apartments out on Lake Ray Hubbard. And there was one fellow in particular, Danny Faulkner, that was the king of that. And he made millions and millions, and they all went in default.
Oh.
And so there was plenty of guilt to go around, but clearly he was fudging the deal or whatever.
He was beside.
Did you say Faulkner?
Yeah.
Well, Wes, so if you look him up, Danny Faulkner, he claimed he couldn't read.
Yes.
Remember that?
Mm-hmm.
Wait, he worked in banking?
He was a borrower. He was the developer.
He was the developer.
And he claims he couldn't read. So, I think part of his defense was he didn't know what he was reading.
Yes.
And he signed documents with an X. That's
John Belushi and Blues Brothers.
Well, I don't know if some of this is legend, but that's the way it was the story's been told.
I think it's pretty close to the truth. Or the net result was correct, in that all this stuff came back, and the government lost a ton of money, and it was, and then of course he had a terrible heart condition and all this when it came time for sentencing.
Well, because he couldn't read the label on his heart medication.
Well, there you go. I hadn't thought of that. And of course, there are a number of miraculous recoveries after they get out of jail get out early that seem to. And he's not the only one in that regard.
Yeah, I'll just say from my perspective, when I was young, living here in Dallas, and this is about the time you were born, Wes, and you and Drew, and the whole real estate market collapsed because we had all this stuff everywhere that had no people to occupy it, no businesses, no people. Right. It was just built so that the money could be spent and people could, whether it's brokers, title companies, appraisers, overfunding, developer fees, anything that could have been put into a budget I live in, right? I mean,
well, the bomb goes off about every 10 or 15 years. And I've been doing this about 60 years, and no one has ever known in advance, never figured it out 1 minute earlier, except one guy did figure out the subprime, and he happens to be here in Dallas.
Yeah.
And
wait, it's the guy in Big Short?
Yeah.
Yes.
Carl Bath.
Mm-hmm.
Yeah. That's he was the I'm trying to think what was his. So we talk about the subprime. That's like the tranches throwing all the crappy loans.
That's the Big Short.
Yeah, the Big Short.
Yeah.
I love that movie.
He was a securities guy.
Okay.
And you could, if you had a 9-year-old handy, they could look at these things and tell they had absolutely no chance of paying. I mean,
yeah, what was it like? No FICO score, no proof of income. What do they call them? Ninja loans?
well, and even besides that, there was one example, and it was a great time for us because we bought a lot of this paper, and the government, in their inevitable way, sold it based on where the savings loan was and what loans they had, not on the property. So if you wanted to buy 100 lots in Plano, you had to also, and this is a real example, you had to take 15 home loans of some kind out in West Texas. And so we put zero value on those. We put about 40% value on the subdivision land, and we got it. And every one of those home loans paid off.
At par?
At par.
Wow.
You would open the file, and in some cases there'd be a check stapled in there and a note in there from Miss Minnie saying, where I took my payment, they said they weren't in business anymore and that it's some other savings and loan. And then they said the government had taken it over. So where do I send my check? And here the thing was right there for the taking.
Yeah.
But also, if you were a land guy, you didn't want a motel in El Campo or, home loans out in West Texas.
Right.
So the matrix they put together was just awful.
Was it awful because it was just so I don't want to say complex in a good way, but they just made it just was all nonsense?
They were just totally overwhelmed.
Oh, okay.
I mean, all these banks. So every bank in the state of Texas basically was taken over. Mm-hmm. Very few were not. And the operations parts to the bank were, some of them remained intact where they had deposits and customers and tellers and all that kind of stuff. But the assets held by those banks in terms of where they invested their money in loans were all shipped out to the junkyard, in essence, called the bad bank.
They had what they called a bad bank, and a lot of that went to the RTC, which is the Resolution Trust Corporation, or the FSLIC, or FDIC, or some of the government acronyms.
Right.
Got this, and the way they were done was just unbelievably good for us. It was stupid in the way they did it. But,
well, I think what they were doing. So here's a take on the other side of it, in my opinion, is that when you have a supply of things and you really have no demand and there's no liquidity in the market, things won't sell for beyond pennies on the dollar. So if you're trying to get liquidity back into the system, you have to reduce the price low enough
so people can spend. So
people will come back in the market and put their capital at risk, because if you bought an office, so here's the deal. We would lend on office buildings at $80 and $100 a foot.
Right.
They would sell office buildings for $15 and $20 a foot, right?
Yes.
Somebody had to be brave enough to invest $20 a foot and have no tenants, paying no rent.
Oh, yeah.
In some ways, there was some reason to cut the price, but in other ways, to Joe's point, I think there were guys on the inside that were selling to their buddies, maybe.
Oh, no, that wouldn't happen. Not with bankers. Come on.
These were federal government workers.
Oh, no, not the government. Come on.
Well, and then and what you said is true, but you basically were bidding on these things, and it would hurt the sale. In my previous example, if you wanted these lots, you really just gave them nothing for all this.
Got it.
$400,000.
The strategy of liquidation was flawed.
And you could get away with that because an institution like Fox and Jacobs or Centennial, they weren't going to buy something that had a motel, lots in houses in West Texas or had a motel in El Campo.
Right.
They were a corporate entity that had to have the lots. And that gave us an opportunity again. At that time, we had pretty good money in our accounts, and we could buy that package and sell the lots to the builder and sell. We kept the loans because they were reasonably short term and they paid off.
So I'm going to kind of transition this into Graham Mortgage, and Graham Investments. But the one thing I want to kind of emphasize is that that everybody has expected that to happen again, for the government to liquidate the banks, to take over the banks, to wholesale, sell, and foreclose all these assets. And so lots of war chests have been formed. And to Joe's point, the bomb went off, but the bomb in Texas after the S&L crisis might have been a nuclear bomb.
Yes.
Compared to all these other downturns and all the other locations, because it was like a death penalty. I mean,
right.
It decimated and destroyed us. And what to Joe's point, private money sitting on the sidelines was able to come in and somehow see value in some of these assets.
So is that why Texas now, you were saying with private money, why so many companies want to come here? Is it just, well, I know because of like the business
honestly,
tax.
I think we got the bad reputation and people did, and we were laughed at. We had no money. Philip and I didn't do deals for 5 years. But as an economic environment and engine, Dallas was coming up because the airport was built in 1974. So this is 10 years after the airport was built, and it was just the economic engine was.
I like to also think that the show Dallas, I don't know pop culture, but it brought Dallas into the spotlight. Like there's people starting to know. I know it had nothing to do with it, but I like to think that some pop culture people are like, oh, Dallas, there's oil money. I don't know. Maybe I'm just talking.
Well,
a cultural landmass. I don't know. I'm just talking.
My benchmark for this was when I worked for IDS, I would go up there every couple of months. And if it was anywhere near the end of the month or the first of the month, you'd walk in an IDS tower and there'd be a savings loan in the bank. And there'd be a dozen people or so standing in line with their little passbook waiting to put it in there and get their 4.5%.
Mm-hmm.
I mean, in Dallas, anybody, they'd go put an option down on some land in Plano. I had to buy a property that is, let's see, it's now the Walgreens up on Mockingbird, and it was an old house, and it was owned by the Orem girls. There were 3 sisters that lived in this house, and they must have been, God, they were old. They were nearly 20 years old, younger than I am, probably. That's old. So anyhow, I thought, oh, man, I'm finally going to find me a pigeon. And I was trying to be nice about it. I wasn't going to really shaft them. But those old ladies were trading Jenny May futures in the back, I'm convinced.
Yeah.
Man, they
very
were sharp.
Sophisticated.
Yeah, I didn't find any special deals.
Yeah. Hey, Wes, so just to your point, though, I think that Dallas, at that point, Dallas was known for the assassination of JFK.
Right,
so it kind of really had a rough reputation. I think the show Dallas kind of shined a different light on it.
Well, the Dallas Cowboys were also
sure.
I'm just thinking of like things where you look like the center of the world before television was really, it was New York was the land, right? So then you start.
Yeah, so I'm going to give you the Chamber of Commerce reasons. All
okay.
Right?
Yeah.
I think aesthetically you can say the TV show, the Dallas Cowboys, it's all kind of glitz and glamour and beautiful people. That's all true.
Right.
But it is in the middle of the country.
No, yeah.
It is in a warmer climate. It did have a bigger airport. It does not have state income tax. It has a friendly business climate. So all these things were now being pointed out. And oh, by the way, cheap housing, cheap office space, cheap, because all these assets were selling.
So kind of fair to say the aesthetics got your attention, and then you're like, we take one extra look. You're like, oh wait, we can do business here.
One or the other.
Well, and the point of my little story just was that generally the people in Dallas were more entrepreneurial and positive business wise.
Mm-hmm.
And my wife came from Chicago and went to the University of Iowa, and they're just still are more conservative. They don't flash. They might have a lot of money, but they don't flash it like you do in Dallas. And particularly back then, they just are not as much of a risk taker.
Right. It's like this system works. We're not going to change it. Is that the kind of the mentality up there?
And to Joe's point, he wasn't born into Dallas society, right?
Right. So you're
and neither was I.
The rebel. You guys are the outlaw.
No,
I mean that in a good way.
What I'm saying
different
is that
perspective.
the environment here is different. Not that he was unique to it and that he needed a special kind of talent. It's an environment where people just, start up businesses, entrepreneurial spirit. I mean, that's what you're describing, right?
When I lived in Greensboro, North Carolina for 17 months, wonderful people, wonderful town. But if you go out into a social event, they'd always get, are you the Grahams from Smartboro or somewhere?
Right.
Yeah.
And I don't.
Pedigree.
In Dallas.
Yeah.
In Dallas, they're more like to ask, can you get me this loan by Tuesday? I never had.
It's all about networking, not about pedigrees.
I can't remember one person in Dallas ever asking me if I'm the Grahams of anything.
It's a really good point. And that's kind of why when I came here, I was 25. I had a 4-syllable last name, driving a Volkswagen with no air conditioning and New York license plate. I never sensed any obstacles to success.
Right. Because
never.
Kind of to your point to North Carolina, Charleston, if you had the last name of Ravenel or one of those names, like you were royalty. And I'm like, but that was like 150 years ago. Nobody gives it. But it's still a big
Obviously,
deal.
they do.
They do. But I'm like, I'm with you. Like, who cares, man? Like,
you didn't say, Wes. I forgot that you lived in Charleston.
Yeah, 20 years.
Yeah.
Or not 20, almost 15
So, no,
years.
it's cool. It's kind of like it's the what makes Dallas Dallas is energy and spirit, and not necessarily. There's plenty of wealthy families here that have big names, and they do a lot for the philanthropy, and they carry a lot of heft. But really, the reason I liked living here as a young business guy was I didn't feel like there were barriers to entry to making a good living. And then after we went through all that pain and suffering, we started to rise and shine, so to speak.
It is an amazing thing. You can talk about it all you want to, but you have to live it to really appreciate it. I have a clipping down in my office where the Republic Bank of Dallas was AAA rated by Moody's. And I think it was 7 or 8 months later they failed.
Oh.
I mean, that's how fast this thing can come apart.
Right. But I feel like the infrastructure for loans and stuff, the real estate world is now not so, I would say, fragile, or is that?
No, because it's demand driven, to your point. We were adding to the supply of everything without it being backed by demand.
Right.
So it became, at some point, it kind of flipped where we had enough product and more people are coming in,
and it's still
you have to keep up now with demand. So at some point, we all said it. Now it's a demand-driven local economy.
Yeah. Was it the Dallas is one of the fastest next to Houston, one of the fastest growing cities?
Well, I think over the last 30 years, you could say Dallas, Houston, Austin, a little bit of San Antonio. It grows a little bit slower, but it's all because of what I would call the spirit of can do. We have some fun conversations about calling New York No York.
Oh, 100%.
It's like there's so many damn rules. It's like no walking, no running, no this, no that, no this. And you come here and you're like, it feels like there's people here supporting what you want to do more than trying to prevent you from doing.
Yes, for sure. Mm-hmm.
So we're 45 minutes in. How does this feel? It's fun, right?
Yeah.
So
I've told you it's good. It's like therapy. You just kind of start letting it out. You feel good and relaxed.
So what was the vision for Graham Mortgage? Why did it why did it birth? Why did it?
Because the owner wanted to make money.
There it is. There's the spirit.
Well, what's this? Yeah, cut it all bone. Yeah, cut it down.
Spirit.
Do you have any other questions?
Yeah.
So typically,
I like to make
lots
money.
Of great stories have a kind of a reason, or you recognize the gap, right? In terms of, was it the lady with the bakery in Highland Park that couldn't borrow?
Well, that was kind of how I got started with this.
Yeah.
I didn't realize, and it's still,
Was this Highland Park Village? I'm just trying to.
Yeah.
It was a house in Highland Park.
Oh,
No,
okay.
she was a tenant in Highland Park Village.
Oh, okay.
Running a bakery.
Gotcha.
And when you go in, she'd give the kids more stuff than you bought, and just a wonderful, sweet lady. And anyhow, that was how I kind of got, wait a minute, maybe there's something out here. And I still, even to this day, I just can't believe how many opportunities come up. I had lunch today down at Susser Bank, and I ran into Sam for a few minutes, and he was talking about the regulators and all, and he was a little taken aback. I said, man, that's just wonderful for Graham Mortgage. I said, I think that's a great idea. And it's just amazing what banks can't or won't do. And I'm not sure on really good ground with this, but one of those that amazes me the most is the cash out loans. If somebody has a $4 million warehouse and they want $1 million loan, as I understand this, and I may not be right.
Really?
I've told people, I said, if you want the $1 million, if you want it, you go to Vegas. I don't care. I'll take your warehouse if you don't pay back. But,
right.
I'm not a loan to own. We're not a loan to own, and we're still not. But, it just doesn't make sense to me that you wouldn't do those, and yet people are at banks that they don't do that.
And I think in a lot of ways, banks, they have a 90% insurance policy from the federal government, right?
Yeah.
If you're a $100 million bank, typically 90 million of that is deposits and 10 million of it is your capital.
Right.
So in some ways, you're beholden to them because they're your insurance underwriter.
Just think about this for a minute. Mm-hmm. Let's say that we chipped in, $1 million and had $3 million. And then let's see, what would that be? We would go out and borrow, let's say it was $10 million. We'd go out and borrow another $90 million on an hourly basis. Our lender could call our note in the same day, not a day, but the same day.
Right.
And let's go loan that out for 5-7 years. Now, is there anything wrong with that? Well, think about that for a minute.
Yeah.
If you came down here from Mars, it's all because the government backs it. It's the only way it works.
Yeah, and I would say that, so again, I think that lots of good business models that are in established areas like financial services recognize gaps, right? So we're providing liquidity. Graham Mortgage provided liquidity where liquidity was needed in a reliable and speedy, rapid way that avoided a lot of what we would call unnecessary friction.
Well, it's a good example for me is, and I will not name names here because there's some good people, but a former major top person at the Mercantile Bank, a person that was the head of the real estate department at a large bank here, and a fellow that was on the trustee of the large pension fund of some $3 billion decided they wanted to buy Graham Mortgage. And when I wouldn't sell to them, they decided to go in business with them on their own and compete with me. It took me 17 months to run them out of business. And they did it just like you would a bank. They had for a certain amount of money, you had the first tier of a committee, and then you had a second tier, and then you had an appraisal you had to have. And at the end of the day, they had the same matrix as the bank. And,
right.
So the point is, we use our own experience, resources, skill to do the underwriting.
Right.
And that we've got a model because it's a first lien deed of trust. It's a senior note. It's a very safe, if you will, business model because we control the property with the deed of trust.
Well, and not to take anything away from the appraisers, but that's historical data. And if you want to know something about shopping centers, you'd call John Byrne or Marcus. There's about 6 people we work with you'd call. And what's the market today? Not a year or 2 years ago.
Right.
And, there's wonderful appraisers and the good people, but they're sort of the least involved and knowledgeable person in the pile and make the least, unfortunately. So, but that's
because it's really based on what they think.
That's what drives the value for banks, it looks like.
Yeah, and I would say that they're getting better data these days just because of things are recorded better. Market data is more accessible. Remember, we had to call Wayne Swearingen to get office rents.
Well,
was that like pulling teeth, or is it,
no? It was just like you didn't have many resources.
Oh, so you just had like
the
a
internet
guy.
wasn't
right.
resource.
Well, when I came here, there were probably a dozen individuals that you could go to lunch and they could cut a check for $1 million. I mean, there was Homer Rader, there was the Corrigans, there was J.L. Williams and Trammell Crow and the Simmons people. And none of those people today, or there is no people, even the Perot family has a committee. Yeah. Everybody that has money either has a family office with a committee. And so it is a lot more, with Dean's point, there's a lot more data available. And also there's more discipline than there used to be.
Yeah.
And
so what do you think? Well, I'm trying to form a question about what's different. What's the biggest difference about business? I think we can probably say relationships still matter a lot, and maybe they're not as easy to form, or
just a lot of things. I think the computers make a difference, the data available. When I came, you didn't have JLLs and all those big companies. There would be maybe 5 or 6 guys who were real estate brokers. And I can't, maybe Sean Byrne, and I can't even think of more than 2 or 3 that are independent brokers.
Right.
It's all done by large companies now. And that makes a difference in how it all works. And I think the data available is just dramatically better now than it was.
So do I. I think the tools we have are evolving in a lot of good ways. But I mean, to your point is that decision making has to be based. The tools and the data need to be discerned, and decisions need to be made informed by the data. But you still need a dude to make those decisions, those investment decisions.
It's much more disciplined than it was. I mean, I know, and you were a part of knowing some people fairly well that started happy hour about 2:30 in the afternoon, and
sounds awesome.
The buying criteria opened up a lot by 6.
There you go.
Well, and they probably had a lot of really good relationships.
Yeah.
Expense report, man.
There was collegiality here.
Well, here's another thing not to forget. The really important item here is that the economy in Dallas made a lot of really smart mortgage people, real estate people, and a monkey could have done some of this stuff.
Yeah. Yeah. And I would say today that Dallas as a city is a world-class city. I mean, we've lived through it. I would say the airport continues to be a big driver of that.
I see.
Now we have Love Field in addition.
Well, trying to get Matt out here, he was, his sister-in-law, but kind of like, oh, you should go to Dallas. It's awesome. And I remember when we left Dallas, everybody I met, oh, I've never been. It was just a name on the map. But now it seems that, people are flying out here either for conferences or something. So Dallas, to your point, it is
lots of reasons to come.
Yeah.
And particularly if you really want, Joe made that statement because the guy who started it wanted to make money. Well, this town is filled with a lot of guys who started it.
We were driving to Trader Joe's today, and I just go, some of these houses are just trying to say, I have too much money.
Right? No. So, and you have entrepreneurial spirit. I mean, there are guys from different countries that come here and really put the hustle on that do really well. Again, I do think that the barriers to entry here in society and in business are low in terms of it. You have, you can get capital. There's guys, if you know how to hustle, there's 200 mortgage bankers in town, probably, whether that's Northmark, JLL, CBRE, all those guys. And we'll put the plug in for Northmark is the best.
Yeah.
Okay, yeah, we'll put that
good guy.
I've been there.
Guys.
Yeah, I've been there. I think I've been there before.
I'll vouch for that.
So anyway, we're coming up on the hour.
And this is only part one as far as I'm concerned.
We're gonna have to do this more. Is there any broad statements about the future, or what would you tell the intern downstairs about our business?
The handsome guy.
Oh yeah, he's got hair and everything. I'd just work hard and try to be smart.
Mm-hmm. Amen.
And you talk about a goal. I have a dear friend that we do that had his. He didn't say didn't come here to make a lot of money. I wanted all the money.
Yeah.
There it is.
What was it on? What was it in Spaceballs? We're not just doing it for the money. We're doing it for a shitload of money.
I would say the other thing is that Joe practices and Philip preached as well is honor your word, right? I mean, Graham Mortgage is known for backing it up. So
I would say reputation because
we don't leave people in the lurch, and we honor, even if it costs us money, we honor it.
I will say that is a big part of and that was something important to me to be carried on. That I can tell you, there's a large number of people that wanted to buy. We had 20 or 30 people, and they would not have done like Dean does, which is just what he said. We actually had people that would come by and spread out their stuff, and a month or 2 months later, they called ready to fund. And just based on the conversation, they know that they had batted 100% on 20 deals.
Right.
And I can praise it. Jim Douglas, I said, Jim, you never made the application. He said, oh, geez, I got it closed in a week, and we did it. But
yes.
I mean, I really can believe that in 10, 15 minutes at our table is more of a commitment that you can get at the bank after, 6 or 8 kissy face meetings.
So the kissy face lunches are, we'll promise you 3% and turn your loan down. You come to Graham Mortgage, we'll spend 15 minutes at the table and charge you 12 and you'll get your money.
Yeah, I mean, that's a solid, and you know that you're not getting screwed. I mean, it seems that you guys have the reputation that, hey, you go to Graham.
Well, we have two programs. That one is the first one where we'll, have some kissy face meetings and talk about 3% and then not fund the money. Or you can do the 12 if you want the money. So it works out.
Yeah, exactly. But who's buying lunch, though? I mean, that's
me.
Yeah,
I'm buying lunch.
He's always good about that.
I'm buying lunch.
Hey,
so let's give a couple more shout-outs, Joe, in terms of longevity. So let's say Jerry Donahue was an important ingredient.
Oh, phenomenal.
Who I took his place. He bought my desk. I went back and sat at that desk. Just a wonderful man, sweet man. Kay McKinney, who was here with you for a million years.
Oh, yeah. Well, just a quick thing about Jerry. When Jerry retired and moved to Colorado and Dean came along, I bet I've had, I don't know, a couple of dozen people say, how did you find another Jerry Donahue?
I'm telling you, that's a real compliment.
Yeah. That is a super compliment.
It's like calling you Mickey Mantle or something like that.
He knew what he was doing, but a really nice guy.
Jerry, and he's having his memory care struggles right now, so we'll just send some love out to him.
Well, I mean, what we did with Pop, this is a good thing to jog the memory.
Yeah,
that's all I'm saying.
I'm not so sure he's in that kind of shape.
Oh, okay.
I think he's past that. So
I got you.
We love you, Jerry. We love you, Sherry. And I didn't know it was a wig.
I want to see it.
I'll show you the picture, Joe, down.
We won't put it as the promo. Yeah, I need to see this.
Oh, that might be fun.
Yeah.
Get her permission.
What's that?
To put that picture of Sherry as the promo for the podcast.
Oh, yeah.
That could be the cover photo. That would be kind of cool.
It's not my idea. And is there anybody else? Who's the gentleman that worked for you that passed away that was the SMU football player? Daryl
Comer.
Daryl Comer. Let's give him a shout.
That sounds like a football name.
Yeah.
Daryl was a wonderful guy. He was made the whole office enjoyable for so long.
Yeah. I've heard you talk. So, and I got to meet him, and was a wonderful guy. Is there anybody else that came into the Graham circle that you can
Sherry
think
was
about?
out of town one time, and Jerry Donahue and I hired the runner-up to the Miss Texas contest.
Nice.
And Sherry fired her when she got there, but it was a pretty big time for 2 weeks.
And there you have it. I would say there it is. Quick decision making at Graham Mortgage. Sometimes it works. Sometimes
just take the shot, right?
When in doubt, make a decision.
Yeah, there you go.
right.
That's another one, man. There's some good quotes I need to pull from
So
this.
we're going to do one day when Joe retires, which is never.
We're
going to do we're going to quote one of my all-time favorites is if you're sitting around a table with guys in suits and ties, there's no work going on.
Right. Well, that was you remind me of Leslie Knope from Parks and Rec. She goes, "No, I'll scale back to 4 days a week when I turn 80. Oh, that sounds so boring. I'm already bored thinking about it. So that's all I can think about when you said that.
Any closing remarks here, Chief?
I think I've had 2 or 3 already.
No, you were good. Thanks
Yes,
so much.
part 2.
Thank you.
All right, guys. It was a pleasure.
SBLI Podcast is an independent production published monthly on the first Thursday of the month. We are broadcasting from the second floor studios located in the Graham Mortgage home office in Dallas, Texas. To learn more about Graham, visit their website, gm-tx.com, or find them on LinkedIn. To hear more episodes, go to anchor.fm/SBLI to find us on your favorite podcast listening platform.